Before we get into the episode, a quick reminder that this podcast is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. If you are enjoying Onramp media content, please like, subscribe, and share, as it goes a long way in helping others find the signal through the noise. Now for a word from Onramp. Onramp is a Bitcoin asset management platform built on multi-institution custody, leveraging our partnership with BitGo and their 10-plus year track record in securing assets, and CoinCover, the premier digital asset risk mitigation company. Onramp's multi-institution custody is a segregated, institutional-grade vault, requiring 2 of 3 institutions at any point in time to sign once a client's unique permissions have been met. At Onramp, we understand that your Bitcoin journey is a multi-generational pursuit, catalyzed by the ideals of perseverance, aspiration, and legacy. That's why we're proud to introduce Onramp Heritage, a suite of private client services dedicated to ensuring your Bitcoin legacy is preserved and passed on, embodying the true essence of wealth that goes beyond mere numbers. If you would like to learn more, please schedule a consultation. As we prepare for the Bitcoin halving and the next wave of global adoption of this nascent and growing asset class, we are halving all annual maintenance fees for clients that secure their wealth before the next Bitcoin epoch.
It all comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
All right. Welcome to the 4th episode of Final Settlement. I believe we just breached all-time highs, boys. The people are calling it on the Twittersphere. They're calling all-time highs. It bumped back down a little bit, but people are willing to call it. How does it feel?
I think it has to do with Cam joining and those nicotine pouches he got. He just channeled some like additional energy that we weren't ready for this morning.
Those 17 milligrams.
Yeah.
Well, welcome. Our guest today is Cam Doody. He was previously on The Last Trade many months back, but very happy to have him on this episode of Final Settlement. Cam, co-founder of Brickyard, a venture firm in Chattanooga, Tennessee, and prior to that, built a moving business called Bellhop. Grew that business very successfully. So he's a builder, he's now an investor, and he's also a Bitcoiner over the past few years. So welcome, Cam. Happy to have you.
It's awesome to see you guys, and thanks for having me.
Welcome, Cam. Yeah, super excited to have you. I think it was after the Last Trade episode, which I like anchor back to 2023 and think through like, while our spirits were high, it was, Bitcoin price was pretty low. So it was, the energy wasn't quite where we're at today. And I think like there was that whole summer around 25K. But part of also after the episode, I listened to a few of the pods you did about the history of Bellhop and some of the learnings and kind of like trials and tribulations you went through. And it like added a lot more not credibility, but like validity or weight behind the things you were referencing about being, when you invest and looking at individuals and seeing their backgrounds and if they've executed, because you had to go through that and work with your hands and figuring out very tough and complex things to make the business succeed. And so, hoping to get into some of that here, because I think that's an important factor of like just allocation moving forward, is just being able to have been in the trenches. So when you look at it, you can actually know who's about it versus who's just telling a story, which I think is very much missing in the allocation world today, where people like to get on the ivory tower and kind of move the pieces when the pieces, they've never been in the realm with the pieces as they're playing in the game.
Yeah. Yeah. That was the core thesis of Brickyard. There was just something missing in venture. And I'm happy to get into that. But where do you guys want to take this?
Well, maybe to start, sort of in honor of price ripping, being in a much different place than we were several months back. This is not a price prediction podcast. I will say that up front. I think the real part of the goal of the show is to really move past sort of the digital gold thesis and just thinking about price and number go up. Like all of those things are great to anchor to, right? Like, number go up is sort of a mechanic for adoption over time. That's a necessary component to this asset being adopted. But we really like to sort of orient back to the technology side of things and Bitcoin as, an open source piece of software that people are building on top of. So maybe a good place to start is Cam, I'm curious, when you talk to either colleagues, peers, friends, family about Bitcoin, if you had to just put aside price and number go up, how would you sort of articulate your thesis around Bitcoin, the technology itself? I have a few different sort of answers for this that I can go into, but I'm curious how you think about that.
I've been trying to whittle this down for like 7 or 8 years now. And I think it wasn't until probably 3 years ago when I read a post. I read one of Jeff Booth's posts on what was summarizing price of tomorrow. And that's really what captured it for me. And so now I can pretty succinctly kind of break it down by, like, on this hand, you have this natural force of deflation that's caused by you and me and everybody else in the economy going to work and building new things and creating innovations that allow us to increase our output with less energy every year. So, like, that's what deflation is we're cramming more, we're becoming more productive every year as we get better at doing things, and better and more efficient at doing things is you're creating better things with less energy input. And so, if I make a coffee mug for $1 and you figure out some new manufacturing process where you can make it for 50 cents, you're going to price it 60 cents and you're going to take all my customers. And that's like how the, production of economy, continues to become more and more efficient and produce more and more things, better things. And ultimately the consumer benefits in that because prices fall in a competitive environment. So you've got this natural, like the natural state of an economy is deflationary. And then you have on this other side, what I say is if we went off of a Bitcoin standard or off a gold standard and straight onto a Bitcoin standard in 1971, all that production would have to get, captured in this battery of money over here. But obviously that's not what happened. We took on debt, and as our debts grew, we're now at a point where when we become more productive in an economy, the Fed has to print in proportion to the gains that we make to inflate that away, or else the debt becomes harder to pay back. And so we're now 34 trillion in debt. Let's say our economy produces 3% more stuff every year. A 2% inflation target is stealing all of the gains that we should be having, plus 2% more on this side. But what, I feel like I'm privy to understand, given what I do for a living, seeing what is going to happen with modern technologies like AI, our production over the next 10 years may go from 3% to 5% to 7% to 10% maybe, right? As we get more efficient at doing all things, and, companies' P&Ls are radically leaned out, where they're providing better services, more services for less cost, prices come down. If we're producing 10% a year and the Fed maintains a 2% inflation target, they're stealing 12% instead of, currently 5%. And so if you have your money in a fixed supply over here, all of the gains that you create in the economy have to be rammed into the same number of batteries. And that's, kind of how I think about, Bitcoin. Like, I feel like Bitcoin is a divine gift. And the reason I say that is because if we had AI and we did not have Bitcoin as like two sides of the same coin, kind of hitting the mainstream, world at the same time, the people that controlled the issuance of money would become more powerful because there's more purchasing power to steal. And so, you look at a lot of venture investors today that are, saying things like, we want to invest in companies that will change the world, right? And they spend all their time, looking for power production plants, like companies that are reducing, prices to the marginal cost of production, right? Creating things that are reducing price, like, creating companies that are more productive than the companies that came before them over here. But the thing that they're not thinking about at all is like the battery that has to soak up all of that energy. And so if you really care about changing the world, you can't do it just by investing in new power plants. You actually have to figure out how to store that energy better. And the funny thing about, most venture investors is because you can't, justify the fees of holding Bitcoin, and there's no management team to diligence, they just completely ignore the other side of this coin. And so I'm trying, in the venture world, I'm trying to sort of wake people up to think like, look, guys, if you want to change the world, we got to keep doing our job over here, investing in these companies that are rapidly creating, more and better things for us every year. But we also have to start storing this money or this energy in a money that's capable of soaking up all of that energy, and that's really, and that's price of tomorrow. It's human flourishing is producing more and better things, and then allowing the consumer to fully reap the benefits of that.
You know what I thought of when you were describing that is like a lot of these concepts are pretty simple in the sense of like deflationary nature or technology. Like as humans, we deliver or create more value with less goods or less things that we have, and that keeps us like moving forward. And I was thinking about deflationary nature, and like we look at the phone, right, and it disintermediated a bunch of things that historically had been in the physical world, and that's a form of deflation of all the different things that are not disintermediated, but like almost dissolved. But I was thinking about what you're doing. I don't know if you've ever thought about like Brickyard. When you think about like value and iteration, right? So you had this world of like allocation, and there was an old guard, and I would say probably the old past 30 years, which I think was always like a fiat model, because when you really extrapolate somebody giving somebody money that made the money to somebody else that's never made money to allocate, you can almost like get to there like, I'm like, wait, there's something wrong in that. But if you take it a step further, if you're talking about deflation, like what's going on at Brickyard, and again, I didn't think of this until you were describing it. It's like you have a single building. How many companies? I don't know, roughly maybe 20, but they don't need 20 buildings. Mm-hmm. They just need one. And the amount of energy, when you go from like a proximity or like fidelity of energy, it's like, it's probably tighter there versus it going out. And all the things, you see where I'm going with this, like it's a form of a better iterative product and more value delivered to the world in what historically had been very kind of like antiquated and, 9 out of 10 lose, and all the things that we know about traditional venture is you're kind of like shaking that up because it's just a better product. It's a better natural evolution based on where we're at on the market. It's just another form of like deflation.
I love that. I have never thought about it that way. But that's the properties of Bitcoin just continue to seep their way into all signs point to that.
Maybe for people in the audience who don't know much about Brickyard, maybe just sort of walk through, how and why you founded the venture firm in the way that you did, and sort of maybe, going back to what Michael was alluding to, some of the learnings from your time previously, building Bellhop, building a business, building something in the real world, and then sort of applying those learnings to largely a differentiated approach in the venture space.
Yeah. All right. So Brickyard started. So my co-founder in Brickyard, Matt Patterson, I think you can see him. We realized something was happening in the world of venture around like 2019, like right before COVID, and that was right before we sold part of our company. And stuff that had started getting really frothy in venture, and a lot of the new founders that had started building in venture were sort of a product of this like marketing engine that had been created by the venture industry, because what had happened was you had so much capital during the 20 teens flowing into venture capital looking for yield, that fund managers that had been raising $50 million funds were now raising $200 million funds, $300 million funds, $500 million funds. And what that naturally did was they had to go out and find more entrepreneurs to deploy this capital into. And so they had to make it cool. Like 10 years, 13, 14 years ago, it wasn't sexy to be a startup founder. Like it was like people just felt sorry for you, actually. Like it's like, oh, cool, yeah, good luck. It wasn't this pop culture thing. The celebrities hadn't gotten involved in cap tables yet. Like it was, if you were raising venture capital in 2012 when we raised our first round, you were doing it with pure intent of, I need capital to create technology that will allow me to do the thing that I want to do. And but you knew by taking that, you're putting yourself in a pressure cooker. And so it was kind of sort of a very serious thing. Whereas, lately, particularly in this last bubble of like 2020, 2021, 22, by our math, like 80-90% of founders in the market had sort of been convinced to be a startup founder because they wanted Forbes 30 under 30. They wanted a line on their resume that said they were an original thinker. They wanted the accolades of this. They wanted Steph Curry on their cap table. They wanted like all the other things aside from building a big company. And what that did is it caused this really bad golf swing. And so Matt and I think we assumed that we were going to just start another company after we sold Bellhop. And the more we thought about it, this thing just kind of kept like slapping us in the face around like something is wrong in venture capital today, because so many of the founders that we meet are very clearly not in it because they want to go to war for a decade and build something really big. And so could we, do something about solving that? And the ultimately what Brickyard came out of was like, how do we create a series of filters that made it really difficult to take capital from us from a standpoint of like sacrifice? And so Brickyard is a traditional venture capital firm. We invest pre-seed and seed we're pretty category agnostic investors. We won't really touch hardware or native healthcare, but aside from that, we're sort of interested in everything because we're investing so early. We're backing people really more than anything. And so we've built this brand on Brickyard around, like, if you're really serious about what you're doing, you're willing to do whatever it takes to put the maximum amount of focus and energy into what you're doing to get to product market fit. And you have a bunch of accelerators out there like Y Combinator that's, a total institution and a juggernaut in the space. But if you've ever seen Paul Graham's trough of sorrow graph, that it looks like, it's like you start out, you think you know everything, and then you reach this like peak of disillusionment, and then you fall into the trough of sorrow, and it's like a knife fight for like 2 or 3 years, and then you get to the wiggles of false hope, and then you hopefully make your way out of the trough of sorrow to product market fit. But like people don't realize, like, this is a 3-year grind usually for companies, and YC gets you to like here. You raise your first institutional round. Everybody that comes out of YC, like, all your assumptions get tested. All the things you thought you knew break down. You have to like really get down to brass tacks on like, what is it that we are actually trying to build, and what is it that the customers really need? And you have to go through this process of like deep introspection to pick up on those like faint signals that lead you to product market fit. And so we're like, we want to build Brickyard, for when these founders fall back into the trough, and that's when Brickyard starts. And Brickyard lasts until you reach product market fit, which that's an ambiguous term. But the proxy that we use is the Series A. And the Series A is basically the free market signaling, okay, this team is at or near product market fit. That's your like sort of second institutional round where you get material capital to say, okay, there's a there, and the team's been capital efficient enough to execute towards this thing. We can kind of feel it. It's not perfectly, ironed out yet, but like there's definitely like demand in the market for what they're building. And the best way, like every stage in company building is so different. It's like the trough of sorrow is won by radical focus and execution. It's not about networking events. It's not about parties. It's not about all these other things that the venture, space kind of sells. It's like, how many customers can you talk to? How honest can you be with yourself? How low can you get your ego to really pay attention? And then, are you shipping, right? And that is what the trough of sorrow is. And if you buy into that mentality of, okay, that's how you get to product market fit fastest, the best thing that you can do is remove all distraction in your life and put yourself in a scenario where you only have one thing to do. It's a forcing function. So Brickyard, when we get to the point of writing a check into your company, you understand what that means by taking capital is you're moving to a mid-sized city in Tennessee where you don't know anybody, and you're putting yourself in a building with 20 other super, ambitious, high growth companies that are in your exact same stage, and you're going to push as hard as possible to get through, to condense that trough as short as you can. And the whole thesis around, what mattered to us during that stage was it was focus, execution, but being around other founders that were in our exact stage, because no one else in your life understands what you're going through when you're in that trough. I mean, it's a dark place. Like, 98 days out of 100 are hard as shit. And 2 days are so good that it gets you through the next 100 days. And when you cram a bunch of teams into one area, not in some like program, we have no programming, there's no demo day, there's no formalized, set meetings. We're just ramming really gifted founders together into the same place and making them build together under one roof. What happens is like one of our teams every few days is having one of those like, stratospherically high highs. And the rest of the building really feeds off of that energy. And it creates this like very familial place where, you get to know these people better than, most people in your life in certain ways, because you deeply understand what you're all going through, and you see how hard everybody is working around you. So you become like brothers and sisters, but you're also like wanting to dunk on each other every day. So it's sort of this like perfect sort of mashup of what we think really matters to getting to PMF as quickly as possible.
Yeah, I love that. I think that's where we've been very excited to have individuals that have, I think about like even how we're building at Onramp, and in the future for just Bitcoin products of like, historically in Bitcoin, it's been, you had Bitcoin knowledge first, and then anything you were particularly interested in, you leveraged, or as a skill at a company, or things that you were just like a hobbyist at, i.e. like, if you're going to go help with marketing because you posted on social for yourself, now you're doing it for a Bitcoin company, versus the next wave is the expert first. And then they understand Bitcoin as deeply as everybody else, but that's their second version of themselves. The first is a professional. And I think a component of all of that is just natural as price, right? Because price runs and then awareness comes and you bring in those experts. And so I've always had this notion that some of the best companies are yet to be built, and also venture capitalists are allocators. And so I think it's really awesome that you came directly from, and maybe not directly, but like while it's still fresh, all the battle scars and wounds, because everything you described is literally impossible to go through unless you felt it and you went through it. And to build the atmosphere for what is needed, it's not needed for everybody, but it's needed for a large cohort, right? Some people can tune out the distractions, but what you're effectively describing is like this reversion to a mean that is of a high caliber with the group that you're holding. Is like, there's all these distractions and conferences and swag and all the BS that people do when they raise money, versus like, how do you just get down and grind? And a big part of that is literally somebody has to love to do it. And the only way you can recognize that somebody loves to do it is that you love to do it. And that's the thing that most people like just miss, but you've done that. And now you understand Bitcoin. So like, I think what you're describing is obviously like very valuable for the traditional technology world and things being built, but it's also insanely bullish for, as you're going down the rabbit hole and learning about the products and services that are missing in the Bitcoin space. Oh, like, hey guys, have you thought about this? Maybe it's people already in the units, or it's net new companies and products. Like that's when we really start cooking with gasoline. And I don't think most of the market's even looking at it because they're still thinking about like Bitcoin here or the market over here. And it's like, there's no difference, but it's still not enough to know those sides. You literally have to explain it the way you did, because outside of that, you're just basically like throwing darts at a board, in my opinion. Because it's the same thing as like hiring, but harder. It's like everybody knows 50% of people you hire just won't work out. It's just natural. Like you just cannot find out. It's even less so if you're allocating capital, because you're literally trying to hire somebody in a thing that you know, very early stage. And so the way you like de-risk it is by knowing what you're talking about.
For sure. And to your point about capital allocation, like VCs allocate capital, and like, you know, the people forget, like founders are the ultimate capital allocators, right? Like they are the base layer of capital allocation. And, you know, I just think there's so many parallels. Like the pendulum is swinging back. You know, venture capital is this hyper bipolar environment where there's a lot of herd think, and venture investors sort of benefit from like following trends. But the real, you know, the best venture investors don't follow trends. Like the way, you know, if you've heard of the quadrant in venture capital, non-consensus and right are the biggest outcomes in venture, right? Consensus and right is like some of your, you know, those are going to be wins that are not going to return your entire fund, right? Because everybody is saturated in that quadrant. So non-consensus and right is where you have to live in that space. And when it comes to, you know, when it comes to capital allocation, like you and me, the three of us, you know, I have 2 daughters. When I think about capital allocation for my personal wealth, it's like when I take a risk on something, I better believe fully that energy that I, you know, place in the hands of someone else or some other thing, I have to genuinely believe that my family is going to benefit from that risk that I took. And so that makes me, you know, a hyper efficient capital allocator, because it forces me to be a fiduciary for my family, right? Whereas you have governments that don't really care about that, because there is no immediate pain for anybody of like, okay, if we create this program, you know, we may incinerate you know, a bunch of energy, but at least we tried to do the right thing, right? It's more like about signaling than it is about results. And what, you know, essentially happens is most of government spending is like bottling up energy that other people have earned in the economy, putting it on, you know, Elon's Starship and like sending it off of our planet indefinitely out of our solar system, right? It's just the incineration of energy. Whereas if everybody in the world is thinking about capital allocation to the same degree that we are thinking about how we allocate capital for our own families, the whole world changes, and we become like this power plant that's hyper efficient that just continues to make more and more and more power and retain all of that. And so, yeah, I try to kind of get all of our founders to that mindset of the importance of capital efficiency. Is like, that is everything when you raise capital. It doesn't matter how big of a round you raise. You know, if you're going to go and just immediately hire 25 people that 50% of which are not going to work out, and you're sort of just throwing bodies at things, you know, the team that is, you know, really closely tied to the problem they're trying to solve and is really tightly allocating capital, those are the teams that are going to win.
Yeah. I think
that pendulum's swinging back.
Yeah, I think that's an insanely important like thing that doesn't get brought up, and I experience this. You know, probably the king at wasting capital at WeWork. And it's kind of fed into a lot of, you know, and I've seen this at other companies. They're the easiest to pick on. but it's really like true. It's like liquidity drowns people. Like whether it's personal, you hear people winning the lottery, or from a company and you just get too much money, because it's ultimately like used to be at a certain point is signal, right, from energy being directed to you that you're doing something right, and now it's a misaligned signal, but people still interpret it as a signal they're doing things right, and then they go out and throw that capital out, and then it just fundamentally literally drowns the rest of the business. And most people don't recognize that, all the way from somebody's raising a large round from a venture side all the way down to the company that gets the investment. And then to your point, starts hiring CFOs and all these individuals. It's like, I love the term constraints breed creativity, because it's like foundationally baked in truth that if you only have so much, whether you like create it yourself or it's because that's just naturally where the market, how it shook out, you're just going to be more efficient with your cost, your use of time. And that's how like innovation happens.
Yeah. Think about the last 10 years, okay, in venture, all right, where there was all this money that was getting rammed into these venture firms. They had to deploy that capital. So they were actually pushing founders to burn through capital faster. Like, talk about like, the fiat money system is basically like everybody thinks about their money like expiring credit card points. Imagine that to like the power of 2, okay, as a founder, where you have like this external force that's like, you don't just feel like your credit card points are expiring. Like, you have like outside pressures that are reminding you every day, like you need to be spending more. And that's literally where the venture space went, where all these fund managers were competing with other fund managers to get markups because they wanted to get, liquid early on these companies and sort of shill their thing to the next, guy down the line, so they could get out and boost their numbers for their fund and go raise a bigger round and take bigger management. It's like the incentives in venture and over the last 10 years are what caused the bubble. Like, it wasn't the founders that, were, errantly spending capital. It was that, but it was because of the forces that at play on their boards of like, what do you mean 300% growth year over year? Like, could we be doing 500% year over year? Right? Literally, that's like a verbatim thing that I've heard over and over again, and we all know, the biggest, most effective businesses in the world are ones that are the best capital allocators, period. You have some operators that just have lightning in a bottle, and those are like your outliers where it's like the founder's like, I don't even know why we're growing, but we're just growing, right? And honestly, I respect those founders way less than the founders that had to scratch and claw to build something, because it really is sort of the difference between luck and being good. And so anyway,
yeah, I mean, it all ultimately comes back to the sort of misalignment of incentives that you're referring to. Really comes back to the money being broken, right? Like low interest rate environment for the past 20 years. All of these things cause that sort of tendency to cause malinvestment in some sense, right? And so you're forced to allocate these dollars, which are being printed infinitely. Growth at any cost is sort of the mantra. And I think it's very interesting that, you already had sort of, had a thought around, things need to be more efficient from a capital perspective prior to getting into Bitcoin. But I'm curious how the Bitcoin lens has even further catalyzed that line of thinking, right? Because at least for me, when I think about, my own personal balance sheet and allocating capital, like Bitcoin is the cost of capital to me. It is the opportunity cost of anything that I go deploy dollars towards, because the alternative is I could buy Bitcoin. And so I'm curious how like that, it seems like you were pretty much all the way there in terms of this sort of differentiated line of thinking, but how did Bitcoin sort of catalyze that even further?
Well, I'll give you a perfect example. So recently, I within the last 8 or 9 months, I'm now on a Bitcoin standard personally in my household. And like what happened is when we sold our company in 19, I had been in Bitcoin since 2015, but I really didn't have a ton of liquidity, and I had bought enough in 2015 and the years after to where like that snowball like had started to grow. But when I really went big into Bitcoin was right when everything crashed in the spring of 2020. I'd been sitting on cash because the Dow was like at 30,000, and like I just didn't feel right about putting it in the market. So I hadn't done anything with the result of our outcome, and I just got so lucky. I mean, obviously I didn't see COVID coming, but like all of a sudden, Bitcoin became like a very large percentage of my net worth, and I that forced me to understand it better. And since then I have kind of gotten to the point where it's like, okay, I'm going to keep like this amount of like fund tokens over here, aka US dollars that I think that this is going to be enough for me to get through this this when the bear market happens. I obviously don't want to be selling my Bitcoin, but there's some things that I want to do for my family and et cetera. And so I sort of like budgeted a slush fund that I sort of just like kind of slowly, spent out. And about 9 months ago, I basically started living on a Bitcoin standard. And my wife had been hearing me talking about Bitcoin for a long time, but she didn't understand it until we were forced to compromise of like, hey, if we want this thing, we have to go and sell this other thing that we have like real conviction in knowing that this is potentially the most important asset that we own. And she started like changing her behaviors around like how she thought about spending money. And that's when she got Bitcoin. And so I guess this doesn't really have much to do with Brickyard, but like, if you can convey the importance of like when a founder raises capital in 2035 and they're raising capital in Bitcoin, like that is going to force them to think about every single hire that they make and every single expenditure that they put into, building technology. Like, is this actually going to create margin for our business, or is this going to improve the experience for the customer? And if it doesn't fall into those two buckets, then we don't put this, potential energy to work. We're going to sit back and wait until we have real conviction in spending this, when the air that you breathe is free, like you're just breathing errantly, right? When you have to pay for each breath, it makes you really think about how you expend your energy. So I'm beating a horse dead, but getting back to like, it all comes down to capital allocation, particularly for founders.
No, I think
so.
I think you tied it back nicely in the sense of like the thing that most forget, whether it's like Bitcoin institutions, adopting, products like ours. It's like you always start with an individual. It's always an individual, right? It goes back to your idea or you reference about the government. It's like, who will build the roads? It's like, we will. Like, you don't need the government to build the roads. But this notion that it starts anywhere but the individual. And so to your wife's example, the reality of like opportunity cost is back inserted. It's something I always think about with Larry Lepard. We talked about like, I can't wait till like Bitcoin standard exists, just because accountability will be introduced back to the world from all across, right? You go to your diner and like he has to actually produce service or he doesn't get paid because that unit is tied to something that has foundational properties versus something you can print. But to your point where you came back to the companies you back and it's all about capital allocation, how they think about it. Imagine that, that same cost of capital or opportunity cost in your wife's head is basically built into, and maybe this takes years, right? Because some people will naturally have to go through a cycle of people will grow up into this world. But imagine the founder, like you're saying, that takes that capital and now is looking at it through that lens. What does that mean from the life expectancy of the business? How do they think about things? How efficient are they? And the only thing that I think was like, that's really where we're headed is this like productivity and efficiency gains. And I think about like even all the Fortune 500 companies, and it's like those companies are almost dead unless they like, really figure things out. essentially because you could probably do most of their businesses at like 1/10 of the people, if not maybe, you know,
Yep.
30%. And so it's just like a complete like repricing and reframing of everything that we're heading into. And I guess the core, going back to the individual, is if anybody's ever struggled with like saving, it's like a heady thing, right? Because like it's very hard when you're always on that rat race to like see the future. But the second you get a solid base, it's like, oh, this is the easiest thing, because it's like everything's cost against like where your benchmark is week over week. And so now you feel good. And so that same micro example, I think about it from a company perspective, because once you have that balance sheet and it's accruing, now every cost, AdWords and all those things are associated with that unit. And that's just like a better world to live in overall.
It totally is. It totally is. Yeah. I think it's something that the gold bugs have known for a long time, right? And the gold bugs are absolutely right. It's just the world is changing with, this unforeseen thing that came out of nowhere, like that. This just totally changing the game. I think about this. So I kind of break down technology companies, of the last like 25 years into like a first era and a second era. Like the first era internet businesses, call it like 2000 to 2023. Okay. You had the internet that companies were building on, that functionally for most companies, benefited from the distribution of the internet, like the ability to grow and scale at a lower cost than you could before, because you didn't have to take, out billboards, and it's like you had to rely less on, you could have these product driven companies where like discovery was sort of hacked by the internet. And you had massive scale where you could get a ton of eyeballs on your business no matter where you were, but the internet didn't, for many businesses, didn't have much of an incremental, benefit to the P&L, like in terms of like making these companies more efficient, right? It's like they gained from the ability to grow really fast from 2020 to 2023. But like I think how we look about tech stocks, like so few tech stocks have actually broken through to have really successful, IPOs, because of the margin component. But going into this next world of like post AI, you have this era 2, which is the internet plus AI, which is now, it's like you have the ability to grow like no other company before 2000, right? But now you have the ability to grow, and you have this like precipitous force that is allowing you to be more efficient to drive that bottom line. And you hear a lot of investors talking about like, when's the first year where a one person company becomes $1 billion business, right? And that's almost certainly happening. And so we're stepping into a new realm where you have companies that have the ability to scale virtually infinitely. Plus you have, this added layer of now these businesses can scale, and they can also just dramatically reduce the prices of all things. And so I'm just wildly bullish around what is to come over the next 10, 15 years. And I think it will absolutely benefit the consumer like it never has before. But again, going back to that, original concept that I talked about, it's like, this is the decade that we realized that there's two sides of this coin. There's like the power production side, and then there's like the battery and energy grid side. And like, you have to think about both of those things if you really have positive intent for the world.
Thanks for tuning in. If you're interested in exploring any of these topics further, or want to learn more about how we can help you secure a new or existing Bitcoin allocation, get in touch with our team at onrampbitcoin.com. We look forward to supporting you on your Bitcoin journey.
Yeah, no, I think I'm curious from your perspective, like when you're thinking about AI and all the impacts it could have, generally speaking, on technology and how businesses are built, from a fund perspective, are you guys looking at sort of AI specific businesses, or just looking at businesses that can benefit from AI? Because it's every business becomes an AI business, kind of like I think every business becomes a Bitcoin business at a certain point. But what is that lens from an investment perspective?
that's exactly it. I mean, you just hit the nail on the head. I think, AI, it's just modern technology. It's not like, it's just modern technology. So like every technology company that's building today, almost every one of our companies has an AI component to it, or they're thinking about how, they're going to be implementing AI. Because if you aren't, and you don't have that component in your business, it's going to be like starting a venture-backed company in like 1997 that like never adopts the internet, So yeah. You hit the nail on the head.
How have you seen, I guess, like a different framing of that with the existing companies and people you're working with, like bent towards leveraging the tools? Because I think that's actually really interesting, even from like digitally native, to see even internally, the predisposition to use some of this stuff versus like it's not there yet, or I'm not going to go. Because if you go in like a lot of like, you naturally have to be a curious person, but then I think that there's just like this willingness to try things new. And like a good example of this is like the podcast formatting. So like you can go and, you can do this and you can pay a producer, and then they can take that and they can chop it up, and you need clips, and that chart is going to cost you per episode a couple $1,000s, or you can download a tool for $30 a month and literally it'll do it all. And like, it's literally the mindset of like, oh, well, efficient cost and like 3,000. Cause we literally went down this route. It's like, well, do we spend $5,000 or whatever it costs a month? It's like, there has to be a better way. And it's like, oh yeah, it's $30 and it takes a little time, but it's less than the 5,000. But I don't think that's everybody yet, right? Like, I think that there's a certain, business profile and individual. So just curious, like how you're seeing, or if you're helping orient portfolio companies, because it's obviously going to, again, goes back to the capital preservation and extending their runway to find that PMF.
Totally. Like I don't even worry about that side. Like Moore's law is going to Moore's law, right? Like companies are going to use better technologies that are more efficient, just because boards are going to be always like making you force you towards thinking about your bottom line. And like when there are tools that exist out there where you can cut out costs in your business, you're just going to do that. Like that's just going to happen. And I think the more interesting, part to me is on the Bitcoin side, where it's like, it's not just how you allocate your capital, it's how you store your capital. And like, I even think, we're starting to see companies like AnchorWatch and Unchained that are going to allow for corporate custody to happen, where, companies soon are going to start carrying a certain, percentage of their balance sheet in Bitcoin, and that's going to buy them runway over the longer term. And, I think also venture firms, like this is a prediction of mine in the venture space, is that probably most funds 5 or 7 years from now, when they go and raise a fund from LPs, they're going to say, listen, we're raising $100 million fund. We're going to allocate 5 or 10% of this fund, and we're going to call 5% of every capital call, and we're going to just put it directly into Bitcoin. And here's why. Venture is one of those things where it's like the top performing funds, like a 60th percentile fund is basically like a 0x fund, right? And so, but what happens when you can go to LPs and you can say, listen, we're going to put 5-10% of your capital, into Bitcoin over the term of this 10 or 12 year term fund. And once people understand what Bitcoin is and what it looks like over a longer time horizon, that's essentially like guaranteeing that you're going to be able to return the principal back to your LPs at a minimum at the end. But what that also does is when you're able to have that baseline of like, okay, we're going to return capital after 10 years. We have 5 or 10% less to deploy into companies, but that 5 or 10% is going to reduce the downside. That's going to allow like way more of the capital stack to take an endowment's allocation of what's probably like a 5% allocation of the endowment to like the venture bucket. Like that may go to like 10%, right? Because there's just less risk, but you still have the upside. and so, or maybe it's 20%, right? And that's like the crazy thing is like if we as a species can de-risk, you know, the capital to a standpoint where we can take more risks in higher growth, you know, more deflationary businesses. And what I mean by take more risks, I don't mean like errantly allocate capital. I just mean a bigger percentage of the allocation of big money is going to be more willing to put their money into, you know, these potentially higher returning buckets.
Yeah, I've heard this a lot. To push back just a tiny bit, I don't necessarily know. I know like it conceptually sounds good, but from an allocator's perspective, like if it was a Bitcoiner who say like, well, I'll just hold the Bitcoin and not pay fees. And if it's an institutional, because I know there's like, you know, without naming names, you know, certain Bitcoin finance groups that are doing like structured credit and blending and all these like very fancy things. The end of the day, like if you think about the sizing, because there's no shortage of hedge funds that do effectively this, where like they just basically trade around the volatility of Bitcoin. So they like go into dollars when they think it's going to like hit. So they like, you basically dampen the upside, but also like have a certain baseline that's above the benchmark of like, you know, inflation. The thought would be you just buy the Bitcoin and then size the venture investment appropriately to pay for the risk versus putting it all and then putting the 10% in BTC, if that makes sense.
Well, I think it's just going to be batched in. Like I don't think these venture funds are going to take a management fee or carry on that bucket, right? On that 5 or 10% bucket. Their fees are going to be like at parity with where like these ETFs are, right? It's just more of, does that make sense?
Yeah, but I guess the question there, if they're not taking the fees, is like they would take liability of holding the asset for that long to make sure, and then the investor, why wouldn't they just buy the Bitcoin themselves? It's basically, I've heard this like a lot from different people on the like edge of this stuff, and it like again sounds good like theory, but when it goes back to the liquid hedge fund, I think the angle, at least the way I've seen it, is it helps people get off of zero, which is but that is a different story because. Yeah,
I should have caveated this. I don't think that this is going to be this way when Bitcoin is the world reserve currency. I think right now where you have a lot of LPs that want to deploy in, you know, money into a venture fund, if that LP doesn't understand Bitcoin and would not otherwise buy Bitcoin, right? But they're being sold, you know, by these fund managers. Like this is how we're actually differentiating from other venture firms. Like,
yeah, I like that. Because you're basically saying, because you're basically saying you're getting pick whatever. There's actually a slide in one of our decks. It's like pick whatever top tier venture firm. You're almost baking in that you will be part of that just based on this one allocation, and think of it like a venture investment into your firm. Yes, but that's like a traditional VC, because like somebody going into regular anything where we're talking about like in Bitcoin VC, it's like I'm just holding spot. If you're holding spot, I can just hold it myself. But if you're like Co2 or you're 8VC, like that's actually a very interesting concept of like, look, especially if you have the discretion, you know who did this that had it was Paradigm. If you know of Paradigm, they were spun out. Fred Ershram was a co-founder of Coinbase, and they spun out. He left in 17. I think it was 17. And in 18, they launched Paradigm with another guy. I forget his name, but long story short, he came from Sequoia. They called all the capital from, it was not Stanford. What's the big endowment? Yale's endowment, Charles Swenson, like Swenson model he was the first that went into crypto. And I think they raised like 350, 500 million. And they literally they bought all 500 million in Ethereum and Bitcoin. And then they sold it, but they're out and they like have, you know, equity bets everywhere. But they just basically did that on steroids, which you're describing of like, look, we'll just have discretion between, you know, BTC. And I think there's a component though that will have to be delivered in that thesis play of like Bitcoin is different than crypto because, you know, and this may be more tactical, but like you can imagine a world where an LP's like, wait, so you're going to like be doing like trading and ICO, like, you know, tokens versus like, no, this is like this pristine collateral that this is going to bake in. But I think you have to position it's like a tech company. Because that's what it is, right? From a growth perspective, when people like think about it.
Totally. Yeah. And again, I like to reiterate, like, I think that there's a window of time where fund managers are going to be able to like front run this thing. Like it may only be for like, the next like 7 or 8 years, where you can actually differentiate by going into a pitch meeting with LPs and saying, hey, look, here's our strategy. Like if you believe that Bitcoin's going to continue doing what it has done, right? If you can buy this, the Bitcoin log chart, right? Even though that you don't have personal conviction in Bitcoin, you don't understand how it works. We do, and we can give you all the materials that you need to understand why we're going to allocate this to it. I think those fund managers are going to be able to differentiate from other fund managers for a brief amount of time before it just becomes, before Bitcoin becomes pervasive, and then it goes back to what you said, where funds won't be able to do that anymore, because why would they do that, right?
I think the wild part on those there's two other risk factors: is A, the ETF playing into like if somebody's just going to buy it, and then B, this requires a fund manager to be as far down the rabbit hole as us, which is
that's what I was going to ask. I was like, where are we in this potential evolution? Like, people you talk to, your peers, Cam. I think when you were last on the show many months ago, it sounded like you had some conversations with not only partners at the fund but peers and colleagues. And there wasn't much open eyes to this thing called Bitcoin. Has that changed over the past 6 months or so? And are people starting to wake up to it? Because I think, at least for me, like the proof statement of everything we're talking about, or one of the proof statements, is MicroStrategy. Like what Saylor has done effectively. Yeah. Like that is the ultimate proof statement of, okay, because at this point, he started this in 2020. So he's gone through a full Bitcoin cycle, and it's worked out tremendously. The company has grown many, many multiples, and he has now this fortress balance sheet of Bitcoin. And to me, it's the same whether it's a personal balance sheet, a family, a business, a small business, a business in the S&P 500, or even a venture fund like we're talking about. It's just a better form of money. This is how we're going to store the value and be able to use that value better over time, be more efficient, all these things.
Yeah. I mean, to your question, 6 months ago, like when SVB happened, we banked with SVB at Bellhop. We had like a lot of money at SVB when that happened. That weekend was like a nightmare. Oh my God. And so after that, like I sort of started trying to back channel with a few of our board members, like, hey guys, we may want to carry like 2 or 3 months of reserves outside of this system just in case, right? And it was like nails on a chalkboard. It was just like they just didn't even like want to think about that, right? In the last 2 weeks, like 2 of those 3 fellow board members have like reached out to me and they've been like, hey, can we get on a call and can you help me wrap my hands around this thing? And so like number go up is like the ultimate, we've said it 1,000 times, right? Yeah. But like this is going, what we know, other people will know. When I have this deep belief, like when you know something is special, it's only a matter of time. It's only a matter of time before the rest of the world finds out about it, right? Mm-hmm. And like, we just can't forget that like 99.5% of the world doesn't understand yet. In fact, like probably 99.9% of the world actually understands the asset, right? And I think going into the 10 years from now, most people are going to be using Bitcoin or holding Bitcoin in one way or another, and have no idea like functionally how it works. It's the same way as like the internet, right? It's most people don't technically understand how the internet works. They just use it every day, right? And so, yeah, I think number go up is just like people are going to come to Bitcoin because it's not because it's this cool novel concept, but because it's actually doing the thing that, solving the problem that they have, right?
Yeah, it's a little, I guess, disappointing, but it is where we're at in that you mentioned you founded Bellhop, and you're telling these guys like, look, it's like, forget about number go up. It's like, from a business continuity perspective, like, do you care about your employees? Like, this is what I was thinking about then. And, just in general, like, if you were in the cockpit, you would obviously have some Bitcoin outside of just making sure payroll and business continues until it's figured out. But I think it comes to this other point where we have an advisor that oversees his synagogue's treasury, and this notion or this idea came up about holding Bitcoin, and it's been like pushed along, and it became this conclusion on the framing now switches. It's not about like, oh, I need to make a pitch to you about Bitcoin. It's like, no, you actually have to have a good, strong thesis on like why we don't hold Bitcoin, because everybody else, this thing is like, here, ETFs. And it almost falls back into like your description of the firm of like, why don't we have 5%? Like, it increases purchasing power, business continuity. It's an innovative technology that maybe we want to accept payments, and whatever the thing is, you tell me why we don't. Because if you can't, then like, some of this goes back to advisors and everybody at a certain point. And I think it's coming. And I always like have this anchor of the six-figure Bitcoin 100K, where these conversations just like have to start happening, and there's credibility behind it because there's a weight of appreciation that nobody's ever seen in an asset that just won't go away.
Totally. Think about, like, okay. So Fred Krueger said this yesterday, or the day before. When Bitcoin hits 100K, it becomes the largest company on earth. Is that right? Or the market cap is, it's gonna be like the number 2 or 3 largest business on earth. I can't remember the number.
What's the price? What was the price that he said?
Like 100. I don't want to mess it up, but it was,
I mean,
something.
That kind of makes sense, because that means that it's going to be like a $2.5 trillion market cap. And so that's above like Amazon and Microsoft or whatever.
Yeah, exactly. So his point is, when that happens, all the big money in the world, like, they can't afford to not own the largest asset, like, in the world, right? They can't afford it. Like, they will have to have exposure to that. And so when high finance starts like having to have a piece of the largest, it's not a company, but that's going to trickle down to all the downstream capital that comes underneath all of that, which is your venture fund, your private equity, your venture funds, all the way down to like the household. Like, it's like the lake above the dam is the big money, right? And that all trickles downriver, in succession, like to the bigger firms, to the medium firms, to the small firms, to the individual, like running a household. And
you got to be careful, Cam. That's that Zin's energy coming down. Like, Brian's about to. Brian gets bowled up sometimes. And you got
to. Well, one bullish thing that we've danced around the topic in sort of a different context, but the AI and Bitcoin sort of synergies, I think, are fascinating and not priced at all. If you're thinking about, the price of Bitcoin and its potential, the way that you were referencing AI and Bitcoin is sort of, two sides of the coin in terms of being more capital efficient and then storing your value in a more efficient form of money. But there's also really interesting synergies there in terms of, if Bitcoin is the native currency of the internet, it is going to be likely the preferred payment of AI agents that are either communicating with humans or communicating with themselves, where it gets kind of a little heady. But I do think that this is a narrative that we're going to see really percolate as, AI continues to be a thing that people are thinking about. And Bitcoin just becomes a very natural sort of synergistic component of how these systems really scale, just in terms of, and it's really Bitcoin, Lightning, and AI, right? Like that's the secret sauce of how this thing really takes over in an interesting way. But curious if you had any thoughts on that, or if you've been digging into that recently.
Yeah, I think that a lot needs to be built on Lightning in order for this to be possible. We know it's coming,
for sure,
right? But people are still trying to wrap their hands around AI. Like, where's the value in AI? Like, basically, my perspective on AI today is like all the money in AI is going to be at the base layer, i.e., NVIDIA, and then at the app layer. And at the app layer on top, it's basically like the models and LLMs are just going to be ubiquitous and you're going to be able to plug and play the middle. The app layer at the top is basically going to pick and choose all the stuff in the middle, and then they're going to create symphonies at the top. Like they're going to plug in all these different things and build businesses based on like what different models, language models are you pulling in? How are you applying it? At the app layer, and so it's like all the value is going to be created at the top and at the bottom, and then everything in the middle is just going to be it's just going to be a race to the bottom on like how efficiently can you make these models, and so we're still trying to like figure that part out yet, but the app layer is going to figure out the payment side, right? The app layer is going to understand, as Lightning continues to build tools that create their functionality that layer needs to kind of plug in that trombone, as part of their symphony. We're just not there yet. I don't think. But obviously, it's coming. I don't know, functionally how far off we are from that, though.
Mm-hmm. Yeah, I think that's a very rational and fair take. I think Lightning itself, to your point, does need a lot more sort of maturing in terms of just being able to scale to the types of things that we're even alluding to here. But I do think, the interesting part about it to me is that I think already in its present state, if you're thinking about, how these models are trained, and basically the existing payment rails are way less efficient than if you're using Bitcoin and Lightning today. And yes, we can sort of discuss around how, whether or not that scales to sort of, billions of people using this. But already today, I think it is more globally accessible if you are, paying an AI model using Bitcoin and Lightning as opposed to traditional monetary rails. So it does, in some sense, already sort of democratize access to these models and the ways in which they're trained. So to me, that's sort of like an early proof statement of there might be something here. But to your point, it does need to mature a lot more for it to be a real reality.
I think so. But, the pace of AI and the pace of, we're like a year into companies building on the app layer, right?
Right.
Like how insane is that? How crazy is that? We haven't even begun to feel the benefits of like what happens when you're building an AI native business, right? Like all the AI, all like the app, that app layer is all like, it's like, isn't even the first out in the first inning. They're all seed stage companies. Like they may have raised big, funding rounds. But the pack of all the companies that have raised on AI haven't delivered a fully functioning product yet. Like most do not have product market fit yet. That's going to change in like 2 years, right? In a massive way. And so I think that velocity of adoption on these companies that are building on that app layer, that's going to push Lightning to become relevant, and every Lightning business is going to be, it's not going to take as long as you think. Like this is going to happen so like what was Chat GPT-3 was what, a year ago?
I think roughly, yeah.
Yeah.
Like how insane. Like 2 years ago, I thought chatbots like still were these clunky things. Like I can't tell you how many chatbot companies we looked for at Bellhop that were just awful. Like I'd almost written off AI as like, this thing's never going to happen. And all of a sudden, like, boom, one day, ChatGPT arose, and it truly one of those mind exploding technologies that you talk about as like, if you had no knowledge of it and you saw it for the first time, like you might have a heart attack. Like, or no, you would think it was magic, right? It's like 500,000 years ago, the first example of this was fire, right? Like if no one had seen fire and you saw fire for the first time, it's like, okay, that's magic, right? And then the next one that happened was like 450,000 years later when it was like the written language or something, where it's like, oh my God, like how can we communicate information? Like how can we pass information down generation without storytelling? And then it was like, to fast forward through a few, it was like the Industrial Revolution. Like first time a farmer saw a tractor, it was like, what, right? And then the airplane, and then the computer, and then the internet, and then and it's all just getting smushed. And without a doubt, like AI is that thing that's happening right now. And I think Bitcoin is like, it's AI and Bitcoin are two sides, to my earlier points, two sides to the same coin.
Yeah, I think that ties into any sufficiently advanced technology is indistinguishable from magic. And I think that's where like the power of whether it's sending a transaction and not being able to be censored, or using Lightning and see it instantaneously, or the AI side. I think what you described about the first inning of the AI stuff is actually, for me, the most fascinating and exciting, because in my experience, and we've seen this, like it doesn't have to be my experience, it's just in general, right? Like the first people through the door are generally not the people that win. They're the people that get shot, and like they have to get shot for industries to grow and open. And ideally they don't die after getting shot, for this analogy. I guess if I have to keep going down it, is that they live to see another day with a different company. And like the one that everybody throws out is the web van and Instacart, right? But that iterative process isn't going to take 15 years and wait for mobile to catch up and all the things. It's going to take 15 days or 15 months, right?
Yes.
And so there's all these fascinating things that came out. And I think of that in the same way as crypto. Like crypto to Bitcoin is kind of like interesting in the sense of there's certain projects that are built in crypto that you look at and you're like, oh, that's interesting. It's just built on the wrong foundation. And the one that I always anchor to is there was this like cryptocurrency called Stepin that like helped incentivize people via like digital tokens to go and like work out and run. And like, it just basically played on, obviously people traded it, but then also people like are social individuals and have game theory and cohorts and gamification of working out. It's naturally why people go and walk together or do whatever they do as a group workout. And so you can imagine, I know some people working on this where like you can actually incentivize via like units, sats or whatever you call it in certain apps that can incentivize. And like, that's really foundational. And like, it's nice because it's interoperable and a number goes up. And there's like a lot of interesting things there that I think they're both side of like, we're just squinting at the very early stages. And most of the things that exist today won't be the future leaders, but they will pave the way for what will be the future leaders based on all the learnings and the technology catching up, along with the entrepreneurial like excellence, because that's still not here in a lot of places.
Yes. Yeah, totally. Yeah. But to your point, like we're not going to have to wait like 10 years for this to happen. It's here. Like the failures and the ones that rise up, the people that go through the brick wall are like, it's literally like the guy right behind the person that went through the brick wall is just going straight through the opening. There's no wait for the market to figure out, the next opportunity and like reconfigure how your approach. And then, anyway. Yeah, like what a wild time to be alive. Oh my gosh.
It is. I just checked the price, guys. We're down a little bit. So we ticked all-time highs. People are counting it. We're back down a little bit. So stay humble.
So we are counting it?
I mean,
I think it's counted for sure.
I think people are counting it. So we'll go with that.
Somebody texted me during this is like, it's kind of crazy anybody calling numbers and projections simply because we've never seen like the buyers, i.e. the cumulative buyers, it's just never been here. So there's just no telling. It just doesn't, the number, it actually does, without throwing numbers out, Cam was pretty bullish pre-pod. And now I'm starting to see like, I guess everything's in play simply because, you don't know
it sounds sacrilegious to say, but it does feel like a bit of a new paradigm in terms of just whole new avenues, valves of demand being open that didn't exist before. And so now you can have some of these sort of reflexive tendencies, whether it's, Bitcoin being added to an all world ETF that then it's just indiscriminate flows, or it's the Michael Saylors of the world who, when that company enters the S&P 500, people are going to have exposure to Bitcoin without knowing it. So it's just all of these little things that sort of snowball and accumulate. So, I do think we are in a bit of a different space.
What about this whole notion that what we just described, once it gets to the collectiveness, which is probably half there, people holding Bitcoin, because like you're always like in the paradigm of thinking of Bitcoin's framework, it's like, okay, you have like these benchmarks of where it can go. And then when you sell, because at the end of the day, like it's the dumbest thing to think like people don't sell Bitcoin. It's like Bitcoin's a tool. It's money. Like we use it for things to like, it's the low time preference thing. The high time preference thing would be like never sell the Bitcoin. It's like, then what are you doing? You're just holding on to this like thing. And
Right.
so, but with that, there's also like a mental model of like which you're coming in and going out. And that can be institutional investors, individual investors from an individual perspective, like the house or the boat, whatever the hell people want. But like what Brian just described kind of like it flips us on its head when you're like, even in my own head, I was thinking about, it's like, well, like, why do I want to like go on that trip? Like, do we just, or if I need to sell Bitcoin, why don't I wait to see how this plays out? Because I don't know what global demand looks like in 2025. And if everybody does that, we already see people doing that already. They're 70% or whatever the number is that's held. Right. But when you see that continuing to go, these people are going to take something off and they're like, well, let me see how far this runs. Just an interesting, yeah.
Yeah. I mean, I tell you, so I personally invested in Anchor Watch and Unchained. And, you know, I invested in those companies like during this last bear. And like, it was like, I had deep conviction in both of those companies and teams. But it was like hard to let go of, like, sell the native asset for the company. I ultimately did it. But like, those are two of my like highest conviction bets that I've made, because it was so difficult for me to like get to the point of like, okay, yes, like this is a you know, this is, I'm going from something with no counterparty risk to counterparty risk. However, you know, these companies need to exist, one, and two, I think that they may outpace the native asset. But it was tough. And I think a lot of the Bitcoin only funds are actually running into that. Like, I think they're obviously timing their next fundraises, you know, for sort of like, as we're like deeper into this bull, because I think a lot of, you know, their native LPs are like, hey, I wish you were raising in like 10 months, you know? So.
Yeah, I think there's a component of that too, going into a larger bull, like the return. That's always been an interesting thought. Like from a venture side, from somebody holding Bitcoin, there's this natural thing that most people don't like to say out loud, that when you have significant material wealth, and it can be with one Bitcoin to start, and then that one Bitcoin turns from 100K to a million, whatever that threshold moves for everyone, that you naturally like almost want to diversify some of that risk, because you always want to be like in the game if something happens to that. And so I think like venture, but the problem is like what you described, if you have that base from 20 to 100 or whenever you allocate it, you're like shit. But at 100, it gets a lot easier, right? Because the multiple increase versus like that capital being locked in the return profile. And there's also a natural thing in venture that we've seen is historically, like the volatility really messes with people, and they rather have like a proxy for the volatility. Well, venture is still volatile. It's like a lot less volatile than BTC. And if you're allocating in size and you have pre-existing conditions, and there's things, I mean, I've seen a lot of this, like raising, you know, money and stuff. It's like, you know, some people are just like, just give me the equity of the company. I'd rather just have like, you know, proxy on the upside.
I just want to see it quarterly.
Yeah, I just want to
24/7, 365 that scares people.
Yeah, waking up, not sleeping right. Wife is kind of like, you know, are we getting this house redone or not? You know, Miss Doody right now is not getting anything fixed in the kitchen for at least 18 months.
I'm literally trying to fix our sink right now because I've refused to call somebody to come and. I think that's. I think that is spot on. No further thoughts there.
Before we wrap, curious if there's anything you, not necessarily plug, but like any portfolio or firms building that are interesting right now that you want to share what they're working on, or any, like I know you referenced a few. I don't know if it would be appropriate, so I'm not going to say the company unless you want to, but you share that's doing some interesting stuff around like data and like just from a geopolitical perspective, and thought that was interesting how it can play into, you know, borderless payments because you have to pay for that. But anything else related to either that one or others that you want to share?
Yeah, there's a really interesting. So one of our companies called Brev.dev. They were like the fourth company that we backed. Just an absolutely killer team. They are essentially building the software layer for NVIDIA. And it's a highly technical product, and I don't want to butcher it here, but they're bringing value to sort of that base layer of the value production in AI, allowing companies to be able to train models and fine tune models with an interface that's doesn't exist elsewhere. And that's going to be key for that app layer up here that's trying to like create that symphony of LLMs here and use and fine tune those models to be able to fit, solve whatever problem they're trying to solve at the top. Brev is wildly exciting. I'd say Coast is another really exciting company. I think it's trycoast.com. And they're building API demo software for API first companies that's making like the technical sell of integrating APIs into like basically a visual where any salesperson can scrape the code of the client that they're pitching, and then show them what an integration would actually look like, as opposed to like, hey, we can do all these things, and here's like a 50-page technical document for our API documentation that only one person in your company can actually break down. And that's usually the CTO. And it's like, you can just go straight to the CEO and be like, hey, do you want this? Because this is possible right now. That one, I mean, if anybody wants to check out our portfolio teams, and I would ask, if anybody's interested in just learning more about Brickyard, go to justlaybrick.com and just sort of like read the manifesto. And the manifesto is like really kind of in the FAQs. But you can also check out our portfolio page, bunch of just wildly. I think we have more teams I think we have more YC teams in this building than live in Nashville, which is just a wild thing. So we've been able to like tap into this undercurrent of really top tier talent, but everybody are those neurotic types that are just totally willing to burn the ships and leave it all on the field. Brick, to put it in Bitcoin terms, last thing I'll say is Brickyard is like the maximalist approach to product market fit. Leave it all on the field. And that's really what it is. So I'm proud of all of our teams. We've got some just insanely awesome operators.
No, I love it. I can't be more excited for what you're working on and kind of like just paving a path for a different and better way to build companies. I don't know if it was Trey or Cam, like 2 years ago. I think you were first talking to him, like, yeah, you got to meet Cam, and shared it. And I remember looking at the website and just like seeing it's like, it's like similar to like Bitcoin or certain things that just intuitively, inherently make sense because it's just like a model that structurally has different foundation, a better foundation. And it feels like you guys are just like picking up steam. So it's super exciting, and, look forward to like continuing the conversation and learning more about what you're doing.
Well, hey, I want to see you both here. Like you've got to come to Brickyard.
Well,
because you can't.
The little secret is Cam has some ties to the hill country. So the thought is we're going to set up, our version of Brickyard in the hill country with, have a hangar. And then Cam, I think, also flies. So we'll just set up, you can teach me how to fly. And we'll just like fly portfolio companies back and forth.
Let's go.
Let's do Tennessee and Texas already have the direct tie. We're just going to bypass Austin and Nashville. We're going to go to the places where the real builders are setting up. So
that's it, guys.
I love it.
Thank y'all so much for it.
Yeah, thank you,
I love
Cam.
this. I genuinely like. It's good for my soul to talk to Bitcoiners, and I'm sure you can see my enthusiasm. But I appreciate it, and I'm just really excited and feel privileged to be a part of this thing.
We still owe you a live podcast recording. Maybe it's I'm sure you'll be around all the noise at 2024, the Bitcoin conference in Nashville. So maybe we'll get Marty, Jesse, and everybody else.
It'll be fun.
We'll do a big 2-hour rip.
Let's do it. I would love that. Yeah, I can't wait to see you guys. It should be a good one.
Yeah. All right. Well, that'll do it for this episode of Final Settlement. We breached all-time highs. Just for context, this is March 5th, so this will air a little bit later, but breached all-time high. So thanks for that, Cam. And we'll see you in a couple weeks. Later.
Sounds good.